Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm your host, Jen Sanasi, along with my co-hosts, Emily Parker, CoinDesk's Executive Director of Global Content, and the Thai Director of Content, Lawrence Lewitton. Good morning to both of you.
Oh, hey, good morning.
Hey. All right, let's take a look at what's going on in the markets this morning. The CoinDesk Bitcoin price XBX index is at 30,711, up almost 1% today. Still holding steady above 30K, but not really breaking that 31K mark. Let's see if Ether is following suit. The CoinDesk Ether price ETX index is at 1,886, also up about 1%. Let's see if DeFi assets are moving in the same direction. The DFX, CoinDesk's DeFi index, is at 115, up almost 2% this morning. All right, let's take a look at some of our top stories this morning. New CPI data is out and it shows that inflation rose less than expected last month.
Yes.
Lawrence, what do we take away from this?
Slightly less. That's what I would say.
It seems like a trend every time we talk about this. It's slightly less.
Yeah, but that's ultimately, isn't that the goal of this, right? Is to get it down to 2% long term. That's or on average. That's sort of where we are here, close to. We're at 3% right now. It was a lot higher a year ago, wasn't it? But it's we're almost there. But that doesn't preclude the Fed from raising rates one or two times just to make sure we get the message. It has to be beaten down and never come back again. I think that's probably what we'll see here. So I'm still in the camp that we'd probably get 2 rate hikes, not just one. We're expecting something still, and I think the markets are still something 90-something% certain that will happen at the end of this month.
Yeah, I think you joined the majority, Lawrence, with the prediction.
I'm a very consensus kind of person. Yes.
Meanwhile, we learned that Cathie Wood's ARK Invest sold $12 million worth of Coinbase shares as the stock races close to a 1-year high. Emily, we saw Coinbase's shares skyrocket yesterday, which is so interesting because they're being sued by the SEC, but they're also being named as the custodian for all of these spot Bitcoin ETFs that have been filed. Tell us about what's going on here.
Yeah, so I feel like that's the interesting part. Not so much the Cathie Wood thing, which of course is interesting, but Cathie Wood's kind of always doing her thing. I feel like what's interesting is Coin racing to a nearly 1-year high because of the reasons that you just said. I mean, this is just like the ultimate paradox of crypto in the US. On the one hand, Coinbase is like embroiled in this SEC lawsuit that could go on for years, that could cost millions and millions of dollars. On the other hand, they just announced the surveillance sharing agreement with 5 spot Bitcoin exchange traded funds. And so it's just these two completely different trends converging. And at least for now, it's pushing up the stock price.
Yeah, I mean, you wouldn't expect to see it, but so many wild things happen in this industry. I'm not surprised anymore. Let's turn to the state of crypto.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Senators Cynthia Lummis and Kirsten Gillibrand had just relaunched an updated version of their landmark crypto legislation. Joining us now is Timothy Massad, former CFTC chairman and current director of the Digital Assets Policy Project at Harvard Kennedy School. Welcome back, Tim. Great to see you back on the show.
Great to see you, Emily and Len and Jen. Thank you.
Always great to have you, especially at this moment in time. So lots to talk about with you. You just co-wrote another great piece in the Wall Street Journal. We'll get to that in a moment. But let's talk about this bill for a second. There was an earlier version of this bill, right? Now this is a new relaunch version. Can you just break down for us in the way that I know you're very good at doing? What's important here? What does this bill say? What are the implications? What's the main takeaway from this bill?
Well, Senators Lummis and Gillibrand are trying to offer comprehensive legislation to deal with a number of issues, both how we regulate the spot market, how we define what is subject to the jurisdiction of the SEC and the CFTC, They've made proposals on stablecoins. They've made proposals on taxation. So there's a lot in here. We're all still getting through it and understanding how it's changed from the previous version. I congratulate them for getting this out there. I must say, though, I don't see much appetite in Congress right now for building a consensus around something basically as large as this. I think as we move into the election year, the election cycle, it's just going to be very hard to build that kind of consensus. But, we'll see.
So, Tim, you actually just touched on exactly what I was going to ask you, which is that I don't see Congress just basically doing anything on crypto before the election. I mean, forget building consensus, like anything at all. And I think, but that's kind of the key thing here, right? Because this bill, as far as, it requires Congress to act, right? So
Sure.
I guess the question is like, and this is just true for all those crypto proposals out there. It's like they require Congress to act. Nobody seems to really believe that anyone in Congress is going to put any political capital into this before the election. So, like, where does that leave us? And I'm kind of curious what that means also for some of the things that you're proposing.
Sure. Well, I think the underlying issue here is there's such a wide range of opinion about what to do. There are those who they were skeptical about crypto before, and the FTX failure and the other failures we saw last year have made them even more skeptical and critical. And so they are very opposed to doing anything that they think would legitimize the sector more than it should be legitimized, or curb the power of the SEC and the CFTC. They, I think, are fully supportive of the SEC's enforcement actions as well as the CFTC's. Then you've got those, who do believe in the innovative potential of the technology and want to try to do something to clarify what the rules are. But again, I think you're right, Emily. I don't really see anything happening. The one area where I'm still maybe somewhat hopeful is stablecoins, only because I think our hand is going to be forced sooner or later on doing something on stablecoins because other jurisdictions are moving to set up crypto regimes, but in particular, where they're setting up regimes to allow stablecoins, you could have stablecoins launched from offshore, even dollar-based stablecoins, and I think that might cause us to say, hey, we really need to move forward.
Right. We'll definitely get to stablecoins, but I got to ask, how much of a hand did you have in this particular piece of legislation? Because this reads a lot like they've been reading their Tim Massad.
Well, look, I've encouraged anyone who'll listen to me to take the approach that I've been advocating, which is let's try to do something incremental. Let's not rewrite the securities laws. And, this is what former SEC Chair Jay Clayton and I said just recently that you referred to in the Wall Street Journal. Our approach is, look, enforcement is important. We're very supportive of enforcement. But, our concern is the recent cases brought by the SEC and the CFTC aren't going to bring us to sort of comprehensive investor protection standards quickly. And that's really for two reasons. One is that litigation takes a long time, and frankly, some in the crypto industry may decide they have an interest in stretching out the litigation because business as usual can continue. And also because it can't really decide some of the questions we need to decide. So we've advocated an incremental approach, which if Congress would adopt it, that would be really great. I think it's an easier thing for Congress to adopt than a lot of these other measures. And that is that the SEC and the CFTC, through a self-regulatory organization, would develop some basic standards and apply those to the platforms as they exist.
And that's why I asked if you had some role in this, because I know that was something you've been championing. Did they call you? Did they email you? They text message you?
I've talked with their staff and suggested this approach to them and explained it and gave some other reactions, some concerns. I do get very concerned about the efforts to kind of redefine the securities law. I realize people don't like the fact that this is it's a complicated definition that's based on some old cases, but it's worked well for us, number one. And number two is we don't really have the information sometimes to decide even whether a token is a security. So I think we've got to put in some kind of basic disclosures and focus on that rather than trying to rewrite the law.
Tim, you brought up the SRO. It's mentioned in this bill. Like you said, it's something that you've spoken about at length in the past. Can the SEC and the CFTC really work together, given how we've seen things kind of play out with both agencies, with various different crypto companies? Is this something that's actually plausible to achieve this ideal state, I guess?
Sure. I think they can. Look, our regulatory agencies often just work as independent actors. That's certainly true. But I think they can. And certainly if Congress were to say that this is what they want, then they would have to do it. And that's why I say, our approach could really be carried out through very, very simple legislation that wouldn't rewrite the law, wouldn't change the SEC and the CFTC's powers. And that's why I think it could appeal to those who both are concerned about restricting the SEC's powers, but also those who, do want to see some greater clarity here.
So, Tim, I guess just to kind of go back to this earlier question, though, it's like, but how do we actually gain the momentum to do this? Because yes, like your prescriptions are incremental, they're reasonable, but it won't. But like, it still requires action, and it still requires like somebody in Congress or enough people in Congress to actually make this a priority. And like, I guess that's something that I'm just trying to figure out. Like, how do we get there?
Yeah, it does require that. You never know with Congress. We've often discounted the possibility of things moving and then suddenly something does move. But also the agencies could do this on their own. We believe the agencies could implement this plan on their own. So, that would require the chairs to decide to do it. And again, we view it as a parallel track to litigation, not, we're not, or enforcement. We're not saying this replaces that. We're strongly supportive of enforcing the laws.
You said it's unlikely we see much movement here before the next election. When do you think that we could see some movement on this?
Well, obviously post-election, there might be an opportunity there. And again, I haven't given up on something happening pre-election. You never know. But and that's why, I always advise people, well, just be ready, be ready for the moment when the, political winds are such that we might be able to move forward. And, that's partly what Jay and I are trying to do by advocating this and by talking to people on the Hill to suggest it and help them think through how it would work. Beyond that, I can't really make any predictions, Jen, as to when something would happen. The one example I often point to, though, is, in the midst of kind of the years after the financial crisis, we were focused on developing the Dodd-Frank legislation. And, the crowdfunding legislation kind of came out of nowhere and passed, and that surprised a lot of people. So, you never know what's possible.
So, getting to the topic of stablecoins, do you think that this, the way it would be structured here, would require a lot more work on the part of the banks? I mean, like, what are we looking at, and how receptive would banks be to that? I mean, is there any incentive on their part to get a stablecoin going?
Well, Louis, I think the big issues on stablecoins are these. One is, is it going to just be banks or non-banks that are, chartered and their activities are restricted, but they're essentially, narrow banks or payment entities. And I think there's an increasing support for that. The second issue, though, is what is the role of the states in authorizing those entities versus the Fed? I think you've got some Democrats who very much want to make sure we have consistent federal standards here. And then you've got, some in the Republicans who would like to see a state chartering option. They believe that's consistent with our dual banking system. So the question is, how do you bridge that? Can you have state chartering with some overlay of minimal federal standards. Or, one idea I've suggested is that those federal standards kick in, federal requirements administered by the Fed. Those would kick in if a stablecoin issuer wants to have access to the federal payments infrastructure. If it wants to get a master account at the Fed, or if the dollar amount of the stablecoin is above a certain level. I think those two things might be a way to bridge the gap on that point. But from what I hear from talking to people, it sounds like that issue is one of the critical ones.
Tim, I just want to go back to your op-ed for a second. So, one thing, and pardon me if I missed something, but I think like one of the critical issues here, and the basic issue, and one of the reasons why Coinbase is being sued, is because there isn't a consensus on what is a security and what is a commodity. And I guess I don't feel like your op-ed specifically addresses that as much, unless I missed something. So I guess like, how do you deal with that issue, right? Because like until that issue is resolved in the U.S., I feel like this kind of thing is just going to keep happening.
No, that's exactly, we're kind of saying the opposite. We're very deliberately saying we don't have to resolve that issue in order to put in place some basic investor protection standards. We're not saying that's not an important issue. It is. And I don't want to, limit the SEC's ability to say this is a security, you really got to comply. But what we're saying is, look, we have platforms today that are trading things. Maybe they're securities, maybe they're not securities, maybe they're commodities. What we're saying is put in place investor protection standards on protecting customer assets, preventing fraud and manipulation, prohibiting conflicts of interest, requiring reporting and recording of information. You can put those in place today for anything these platforms are trading. Now, the question is, what's the jurisdictional reach? Where that's where Congress could say any platform that's trading Bitcoin or Ethereum today has to comply with these standards, which we want the SEC and the CFTC to develop. If you say that this applies to platforms that are trading Bitcoin or Ethereum, you're going to get the entire market, right? There's no platform out there that's, significant, that's not trading most likely both of those tokens. So that's the hook. That's the way to say, here are the intermediaries that these standards apply to without having to resolve what's a security and what's not a security. We're going to say, look, that can still be litigated. And what we're saying is, let's require these platforms to provide some basic disclosure on a token before it's listed for trading. And that actually will help us determine what's a security. You can't really answer what's a security unless is there a common enterprise still behind this? Are there managerial efforts that, people are looking toward to increase its value? We need disclosure to figure that out.
All right, Tim, we're going to leave it there. Thanks so much for joining the show. It's always a pleasure.
Thank you.
That was Timothy Massad, former CFTC chairman and current director of the Digital Assets Policy Project at the Harvard Kennedy School. Coming up, a crypto markets update as a new inflation report comes in lighter than expected. That's ahead. Good morning and welcome back to First Mover. Lawrence has some interesting data that's been compiled by the TIE on the Gamma Exposure Index. The index gives us a sense of how exposed the overall options market is to moves in the underlying crypto. Lawrence, talk us through this. How has the Gamma Exposure Index been performing for Bitcoin, and what does it all mean?
Well, let's take a look at it. I think we have a chart coming up, and this, of course, I got to, one of the fun things about being at the TIE is they give me all the charts I possibly want to play with. And as you know, I kind of love doing that all day. I don't tell them, but this is just, I goof off all day and make these charts. So if you look at this chart here, this is the chart of Bitcoin, which is the red line, the price of Bitcoin, and the Gamma Exposure Index, which is the blue line there. And without getting into the mathematics of how it's calculated, let's just say this. If it's above zero, that means that the options traders are net exposed long. So the way to look at it is every time the price goes up, the options traders make money. And we see here that for a long time, they were heavily long, they were net long, basically. And then all of a sudden the price, or rather the Gamma Exposure Index went down closer to zero. That means that either, they're buying a lot more puts, they're selling their calls, things like that. But it creeped back up a little bit. But notice that it rarely goes below zero.
So, Lawrence, we have another chart on the open interest in terms of contracts. So can you break it down for us in language that, non-astrologers can understand? What this says about...
this isn't technical
we're not
analysis.
All astrology
you have to explain
here, so.
the joke now to the audience.
I'll let Emily do it.
Yeah. Well, I don't know if this would fall right into that category, but technical analysis is astrology for men, we like to say, and Lawrence is our chief astrologist for men.
Yeah, and I'm not. I'm actually not. I'm sort of a debunker of it. But in this case, this is not astrology. This is actually just to give you a sense of what's going on in the options market right now. So these are contracts, and I don't have the other chart, which shows you basically what's in the money and what's out of the money. So this would show what we would expect. They have a lot of put. That line there is the difference between calls and puts, right? So you see there's a ton of, on the left side, that's the price below the current strike. The current strike is about $30,000, right? That's that at the money is about 30, 31. So that's that long line that we see there sort of in the middle. On the left, all those contracts, that's where the strike is, like, 20 something, 10 something even. And you see, wow, there's a lot of stuff going on in the puts. But if you were to look at it when you look at what's in the money, you would see a lot of calls. And you'd be like, oh, well, they're really, as we saw in the Gamma Index, they're net long. But you know what? They do have a lot of protection there on the downside, which we would expect to see. But notice there on the right of that chart, you get a lot of these calls there, a lot of people betting on some wild moves in crypto, buying those low delta options and hoping maybe they got a lottery ticket.
All right. And Lawrence, lastly, tell us about expirations. How did the markets react to the quarter end expirations?
So take a look at this. This is actually where those options that we saw in the previous chart. So now this is their expiration date, and you see they're all bunched up in two spots, right? You have July, the end of July, and the end of September. End of July is the end of the month. End of September is the end of the quarter. End of the month. Guess what happens 2 days before the end of the month? It's going to be when the Fed decides to raise rates. Guess what? I think they're going to raise rates. Call me crazy. They're still going to raise rates, okay? 25 basis points at least. Anything wild that happens, though, if let's say they decide, you know what, I don't know, this thing's maybe causing more problems, we're not going to raise rates. All hell breaks loose. You're going to have a lot of options traders sweating it. What's interesting to note is that when we had the quarter expiration back at the end of June, which seems like so long ago, but it was a couple of weeks ago, we had a huge spike. We had a huge spike in activity and volume. Yeah, we saw the price stay around 30. All right. It's like, the options market tends to like to keep the spot market, and it sounds like tail wagging the dog. Keep it around where most of where most of the options are hanging out right now. They're all hanging out at 30. My guess, going to hang out at 30 for a while is what I'm basically saying. So it'll be interesting to see what happens in a couple of weeks.
All right, Lawrence, thank you for that. And you're going to take us into the next segment where we're going to dive even deeper into the markets.
Why, yes, we are. And of course, we're at about $31,000 now, a little bit above $30,000. And that's because the CPI, the Consumer Price Index, was up just 0.2% in June. Right? It's at 3% year over year. It's a little bit less, a little bit less than expected on a seasonally adjusted basis. Joining us now to discuss the crypto markets is the CEO and co-founder of Bitcoin platform Unchained, Joe Kelly. Welcome, Joe.
Hey, y'all. Great. Good morning. Great to be here.
Glad to see you. So what's your reaction here on the June CPI number coming out? A little better than expected, a little bit lower than we're getting almost close to 2, aren't we?
Yeah, I'd say on the one hand, it's a relief. I pay attention to folks like you who want to, I think, predict further rate hikes, and I think that can make me uncomfortable. Unchained as a business straddles Bitcoin as a market, which in general, in a real sense, for many of our clients, things like these interest rate hikes don't affect them. But we're also a lender, we're a dollar lender, so cost of capital going up. Lending rates, that does affect our business and does affect our clients on the borrowing side. So I'm certainly, I would like interest rates to stay where they're at and come down over time. Once again, I think that's better for our business. But at least for waking up for what the news brought this morning was a pleasant surprise.
Hey, man, I'm a net borrower all the time, so I feel it. I understand. That's just so,
all the more capital to buy Bitcoin with, right?
Yeah, that's a different story, though, and my accountant's always upset. So we saw this spike up to 30,000 a few weeks ago, of course, with the Bitcoin ETF filing by iShares. Do you think this is, I don't know, a little bit more excitement than is due?
I don't know. I think it's just enough to kind of keep what kind of hope and future anticipation kind of in a reasonable range. I think it's nice to see Bitcoin not really gyrating around too much. It's nice to see it be a relatively stable asset. I don't know what it's kind of implied volatility right now compared to the rest of the market and other assets, but I'd say it's probably very good, or in some sort of top quartile in terms of very reasonable range that it's in. I think a lot of the context I know myself and other Bitcoin market participants are thinking of is next year in the halving, and there's kind of a cold spring effect. I can imagine just kind of a good.
You think the halving will have an effect?
It almost certainly has historically. I heard the astrology comment earlier, and I totally understand that feeling and that sentiment. And look,
this is beyond astrology. This is almost this is fortune telling. This is
you can and I'm there. Look, as a rational human, I am, but I'm also, you look at kind of empirically what's happened historically, and so it's kind of like, well, why wouldn't you have a little bit of odds? Why wouldn't you at least up your odd a little bit that like something like the halving has some effect, either market psychology or like some fundamental supply, the quantity that's coming to market. So yeah, I think I know ourselves and a lot of the industry, there's kind of some preparation, some mindset towards next year, and a lot of stars that might align between interest rate rises ceasing and just kind of things being set up for a really exciting year next year.
I feel like the market narrative right now is kind of confusing because if I'm correct, Bitcoin's up something like over 80% year to date, right? Like it's up a lot. But it still feels pretty wintry, to be honest. Like it just doesn't feel that buoyant at all. You look at exchange volumes around the world, exchanges look pretty stagnant, like kind of everywhere, not seeing a lot of new users. So like, what's going on and who's buying this Bitcoin anyway? Like, cause like, I feel like I don't know any of them, so it's just a bit of a confusion.
It's not you, Emily?
You're just trying to say, people are afraid of wash trading. People are getting more afraid of wash trading is what she's trying to say. I
But
think.
my point is that 80% year to date is a very like impressive figure, right? And then you have all these spot Bitcoin ETFs, and you have like, so there's like this some momentum in parts of the market, but then it really feels like there's like a lot of tumbleweed in other parts of the market, you know? So I guess like, I don't know. Yeah. Like who's buying all this Bitcoin? Like where's this coming from? Like what's driving Bitcoin's momentum right now?
I think I actually inverted a little bit, and I look at who's holding the Bitcoin and who's not selling. So there's a quantity you can find, which is that 70% of all Bitcoin hasn't moved in a year or more, and that statistic or that range. I mean, it's kind of it dipped out like 57% in like 2017.
But why would the price be shooting up that much though if people are just holding it and not selling?
I think just to the degree the selling, like the sell off kind of ceased in Q4, and then like there weren't as many net sellers as there was, and then but like the same buying volume, or maybe there's an uptick in some buying volume, and that just sort of had an amplification on the price. And so, yeah, I think from what we see, at least as a business, and the kind of clients we work with tend to be the long term holders that aren't so much speculating on the asset, but like kind of have a stash, continually add to it, and that I think that effect and that constant buying pressure, when there are still few sellers, like really does help. And that's why I think Bitcoin does perform a little bit differently than stocks or other things, because there's so much attachment, there's so much kind of long-term belief, and seeing it as a multi-generation asset instead of maybe an individual stock or security.
All right, Joe. And lastly, on the topic of Bitcoin, Unchained has just launched a new membership-based service that aims to help high net worth individuals, institutions, corporations manage their Bitcoin. Tell us a little bit about that.
Yeah, thanks for bringing it up. It's really an extension of what we're kind of talking about here in terms of the long-term clients that work with Unchained, and even new clients that are looking for advanced levels of expertise, access to our team, which is some of the best minds in Bitcoin about how it works technologically, best ways to secure it. And that's just kind of a need that's always there in the market. Bitcoin is confusing to a lot of people that haven't spent a lot of time studying it. And even for people that have studied it, there's still things they don't know. It's really trying to find good fits for those people that can provide them the expertise and even like community that they want. They want to find like-minded individuals that believe in Bitcoin the same way they do.
Joe, thanks so much for joining the show this morning.
Thanks for having me. Yeah.
That was Unchained CEO and co-founder Joe Kelly. We're going to take a quick break, and when we come back, we'll be diving deep into Web3 gaming. Stick around. And welcome back to First Mover. Web3 games are gaining traction, but when it comes to numbers, top Web3 games have only captured a small fraction, if any, of the players compared to top Web2 games. This is according to data from CoinGecko. Joining us now to discuss is Alliance DAO Core contributor and PhD in game studies, Will Robinson. Welcome to the show, Will.
Hi, lovely to be here.
Wonderful to have you. Let's talk about Web3 games. I think when we hear about Web3 games, we think about play to earn. You know, I've spoken to a bunch of people in the gaming industry who say things like Ponzi scheme and unsustainable when we hear play to earn. And then on the other side, we have people like Alexis Ohanian tweeting that play to earn is the future. Talk to us about this business model. Is this what is going to push Web3 games forward?
Sure. So in the academic community, we talk about this concept called playbur. It's a mix between play and labor. And the idea is, how do you value the work that gamers put into playing games? And I would say like the most naive look is thinking about, actually playing the game, grinding, growing your character levels. But that is some kind of work, but it generally creates a lot less value than the people who are modding your games, playing as influencers on Twitch, who are competing in pro tournaments, or building new art or art assets and acting as ambassadors more generally. And so when we think about those kinds of activities and how you could play to earn, but where play is more laborsome than we usually think, and laborsome is a word I just invented, so don't worry, it's not real, then that means how can we get payment rails using crypto to reward them? And if we can find some kind of business model where we can adequately reward players who are creating value, can we get like a delta positive where we're just paying lots of players to produce a little bit more value than we're paying them, and then scale remarkably more than what Web 2 can offer? So I think that's where the excitement ought to be.
So all this makes sense, like on a philosophical level, right? But clearly it's not quite there yet, right? Because we don't have a really awesome Web3 game yet. And there's many reasons for this. But one of the obstacles I'd love to hear kind of your opinion on is, like, in the United States, at least, there's definitely quite a lot of backlash in the gamer community just against this whole idea, right? Like every time, somebody comes out with like a play to earn idea or like an NFT thing, like there's going to be like a huge eruption in the gamer community being like really not into it, right? So I guess my question is like, how big an obstacle do you think that still is?
Sure. I think it's an enormous one. So on the first hand, there's this lingering ESG, like environmental issue, where 2 years ago, a blogger explained how NFTs have this huge carbon footprint. And I think a lot of players just decide to cancel crypto games forever, despite Ethereum moving to proof of stake and none of this actually having any environmental impact anymore. So there's that angle that lingers. There's also a history of money ruining games, and there's been backlashes against money coming into games for as long as I've been around. So it started with Team Fortress having like cosmetic items in its first-person shooter, and people got very angry about these cosmetic items. Like, why would anybody pay for more content in the game? And today it's considered just normal that we have, payments for micro assets. So if crypto is just payments, and we already have payments in Web 2, there shouldn't really be any kind of concern that would be the limiting factor. So I think when people are worried about crypto and games, they're worried about these reflexive economies we've seen and this narrative of play to earn. Very early on, the narrative around play to earn was just playing the game should be enough to make you money. And I think that's absurd, right? It's obvious to anyone who looks back at this, like, you can't create value by just playing a game. You have to do more than just play it.
But to Emily's point, I mean, isn't the real underlying problem is that the game's just kind of when it comes to Web3. Like, I don't know anybody. Sure. Like, I know a lot of gamers. I know a lot of people really into it. Like, you literally cannot pay them to play it. That's really what it feels like, because they're like, their time is worth more doing something they enjoy rather than a game that's just like mediocre.
Definitely. I think that Web3 has a lot of things to worry about. One, transaction throughput is just not fast enough on chain to do anything reasonable at scale. The other problem is account abstraction. Nobody wants to handle private keys and seed phrases and fund accounts. And so luckily we have a whole bunch of technological stack coming into the future.
All that stuff. They would do all that stuff if the actual game itself was something they want to do. Like I got
sure.
people who will do weird stuff to play games, but they're not.
But there's technologically no limitation. There's nothing that stops Diablo from adding NFTs to itself, right? There's no like technological barrier to there being a fun game because the vast majority of Web3 games are just played on Web2 servers, right? They have the same like Unity backend, the same server backend, and so there's nothing that just like magically stops crypto games from being fun. It's just it takes a lot of money and a lot of time. A great game today, like Marvel Snap, one of the best mobile games today, took 4 years to develop. We haven't had like the idea of making successful games on chain for 4 years. So any games that have come out now are games that have taken less than 2 years to build from the last full cycle, which means they're half developed, half baked games are all you could see right now. And so we'll expect to see good games come out in the years to come as the development cycles mature to meet the length that a normal modern game takes to build.
All right, Will, we got to leave it there. Thanks so much for joining the show this morning.
My pleasure. Thanks for having me.
That was Alliance DAO core contributor Will Robinson. That's it for First Mover. I'm Jen Sanasi. Thank you to my co-hosts Emily Parker and Lawrence Lewitton. We'll see both of you tomorrow. First Mover returns tomorrow at 9 a.m. Eastern Time. In the meantime, you can catch The Hash today at noon. You're watching CoinDesk TV.